folks. This is Tom O'Brien of TFNN. We go 5 days a week. We are 9 hours a day. We go 24 hours a day on the Internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Making a great night, folks. Market-wise, let's take a look at it out here. We had the Dow Industrials down 101, NASDAQ off 29, S&P's off 9.5, gold contract up $10.70, trading at $1,305 an ounce. Silver up 22 cents at $19.77 an ounce. Platinum up 28 at $1,482 an ounce. Copper up 2 pennies at $3.16 a pound. Light sweet crude up 44 cents at $102 and 14 cents a barrel. Bonds, the ever-ready bonds, folks, ever-ready money, they went topside once again, wide price spread, with conviction, with volume, with all of the above. 10-year up 16 ticks at 125.18. 30-year up 1 point and 6 ticks at 137.02. And King Dollar down 93 ticks at 80.12. You got the euro flat at 137 and the yen trading down 42 at 101.83. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do we have out here? Let's see this. A little challenging. I just got off the plane, folks. I'm in beautiful Boston right now, overlooking this beautiful harbor. Going to meet tomorrow morning, but it is gorgeous here, no doubt. So, S&Ps, what do we have? Okay, so if we go back to yesterday first, this is what you have. You have your April 4th high. April 4th high, 1897.28. Had 851 million up there. We get up and we test that area yesterday with 604 million. Today we back down with 590 million. Now, we're going to need a lot more volume in order to basically get the lower price. We got the lower price today, but there's going to have to be an expansion of volume to get us down to the first price point where I expect we're going to go, which is the 1814.36. That, folks, in the S&P is the April 11th swing low. The next area is going to be the February 5th area. The February 5th area is the benchmark on all the indices. In this case, when you're talking the S&P, you're talking about 1737. The ironic part, I think, is that, between being on the plane and listening to the financial stations on the way in, was that the mantra continues to be out there, you don't have to worry about any pullbacks. The market's still going to go higher. It's amazing. Anyway, bottom line, what do we have out here? We're going to need heavier volume to get into lower price. We take a look at the Dow Industrials. What you have with the Dow Industrials is this. Dow Industrials come back, let's see. She come back $100, which is not the end of the world for the Dow. The Dow Industrials right now, they failed too. They also got inside the range. The range on the Dow Industrials from the April 4th level is 16,631. We close at 16,616. That's saying the Dow wants to run down to the 16,015, and I suspect what we're going to see, that benchmark is hanging out there. That benchmark is the 15,340. Now, NASDAQ Composite. We go take a look at the Composite. What we have with the Composite is this. Composite out here today pulls back. Well, first off, what the Composite had done is this. The Composite had actually failed yesterday. The Composite, first off, should have had a much larger bounce. It couldn't get a bounce going to the top side. The Composite got to a price point yesterday of 41.55. The Composite, folks, should have been able to bounce up to like 41.90 in a heartbeat. Bottom line, couldn't handle it. What do we do today? You pull back. Now, the Composite is also going to need more volume. We only did 1.73 billion versus 1.9. What you do have, however, inside the Composite is, because the bounce was so anemic, that this could be a very large ABC structure on the way down. We'll see how the volume either expands or contracts tomorrow as we try to get into lower price. We take a look at the bond market. The ever-ready bond market, folks, is just amazing. There's no two ways about this. What we have with bonds is this. The 10-year bond goes topside today once again. That topside move today, we did it with 1.5 million contracts. It's a huge move. It's an ABC structure in the way up. Right now we're out there. We're trading at that one. Come on, baby. There she is. Okay, so we're trading at a 125.18. That little baby is on its way up to the 129 area. The 30-year is just the 30-year had broken the B point quite a while ago. The 30-year goes up over a point out here today, has the price spread, has the volume, has all of the above. That is basically, well, it is saying the 30-year right now, it was just a little bit slower here, but we will get this. Okay, so the 30-year right now did 370,000 contracts. We're at a price point of 137 flat. Now, when you take a continuous contract, folks, the 143 area in the bond market, in the 30-year, is the first not only price point that this thing wants to run to, that price point there is going to be crucial to see if, in fact, it can break through that area. And this is why. The way that bonds came down after going up astronomically for a huge amount of time, the bond market topped out in June of 2012. Well, we're approaching June of 2014. It's hard to believe, but you're talking 2 years later. So we topped out in bonds at 153.03. We went sideways for about 7 months. Then you had a monster downdraft. That monster downdraft took bonds from 149 into 2 months to 133. Doesn't seem like a lot, but the bond market, that was brutal. Now, in the context of this bounce, we're going to go see the 143 again. If you break through 143, these rates are not, it will not only go to the high, it could bust through the high. Because on a much longer basis, okay, what you have on a much longer basis is a trend that hasn't broke down, not even close either. You have a market that went topside. It came back. It tested with dramatically lighter volume the breakout area. You have a bond market that has been in a bull market since 1980, and it just, bottom line, the trend is up. So we'll see how it tackles that high that's out there. The bullish part, well, here, I do the bearish and the bullish. The bearish would go like this. The bearish is you're up at the 143, you're going sideways, volume dies, and you come off that area and you have an expansion of volume. Then you go back up and test the area. There'll be a test, and the volume dies in the vine. You have that, that's like saying, okay, the bond market's getting tired. That would be the bearish scenario. The bullish scenario goes like this. The bullish scenario goes that we thus far it's bullish. The bullish scenario to continue goes like this. You move up to about 141 or 137. Then you're going to go sideways, and you're going to build cause, and then you just blow through the 141 area. You do that in the bond market, we'll go past 153. That's going to bring rates down dramatically, dollar up dramatically, and that's what that's telling me. If, in fact, that is how it shakes out, what we will see is we're going to see a downdraft, not the type of downdraft we had in 2007, but you're going to see a downdraft that's pretty dramatic, meaning it could be 12, 15, 17% in the S&P. Everyone thinks that you can't have a 10% correction in the S&P. If you take a look at the small caps right now, the small caps are probably running about 11%, but in fact, that's the average. If you take the average small cap stock, it's probably down 25 and 30%. This is Tom O'Brien, the TFNN. You stay right there, folks. We're going to be coming right back.